and clearly volatility likely to prevail for the next 90 minutes. Really, that's what the key takeaway, at least for me, is. But we'll wait and watch as to how that plays out on our index. We're clearly seeing very quick 50, 60, 70 odd point moves on the Nifty 50 itself. But on the other side, what we're going to do is we're going to slip in a very short break. On the other side, we'll have Rohit Sekharia, who's the senior fund manager at Sundaram Mutual, who will be joining us this afternoon to give us a sense of how he's viewing everything with regard to markets. Stay with us here on ET Now. Welcome back, and we're joined by Rohit Sekharia, who's Senior Fund Manager at Sundaram Mutual, who's joining us this afternoon. Great having you, Rohit. How are you maneuvering these very, very volatile times?
Thanks for having me here.
Great having you.
Yeah, I agree. This has been a quite volatile period, especially last month and a half. And what we are doing is essentially we are trying to figure out, like right now, what we are assuming is this crude-related disruption and this US-Iran war lasts for at max another month or so. So in a case of that happens, then the crude prices remaining high, and to that extent, all the petrochemical complex remaining high, that should be the first half of this year. From second half, we think should be normalizing, and market should basically earnings should be improving towards the second half of this year in that case. However, valuations for the market has become very reasonable, and valuations are looking very attractive right now to enter and invest in the market for an investor who can digest this short-term volatility.
Rohit, what happens if this prolongs? What's the kind of earnings drag that you see? Because I believe that a large part of the dip is because of that fear that this is not going to be short-term, this is not going to be a very quick resolution. And even if there is a quick resolution, supply chains may take time to realign themselves and really start to impact companies in the meantime. And therefore, how did you look at it, and what's the kind of impact that you're penciling in?
So, as I said, right now what we are penciling in is an impact which lasts for first half of this year at max, and things normalizing from second half of this year. But that's how we are penciling in. So the way I'm thinking is, in that case, what happens is markets will look through that this is a short-term disruption, this has happened, but on a normalized basis, earnings are looking healthy. So market will look through that, and markets, even though earnings may be weak in short term, markets will start rallying much earlier. That's how we are looking at it. And to that extent, very frankly, the way I have positioned right now is what way I like is mostly what I call services. So when I say services, I'm not talking of IT services. I talk of broader services basket in general. So let's say the entire BFSI sector, banking and financial services, or for that matter, retailers, especially jewelry retailers in consumer discretionary, telecom, or hospitals within the pharma space. So like all these players effectively are dealing from this entire narrative of crude and petrochemicals and correction or prices going up leading to some margin issues. So these companies have also corrected in last 1.5 months, and these companies, I believe, will fare much better as soon as situation stabilizes.
I get your point. Where, Rohit, within the pain pockets, one of them being financials, the other one being IT, what's your view there, and where is it that you're seeing value? Because financials, again, it's so broad. There are small finance banks, smaller lenders, some of the larger ones also have taken a hit. How do you see that entire basket of stocks?
So within financials, actually, I like the entire gamut of lending financials, both banks and NBFCs. uh, they have taken a hit. The hit is more from the worry factor, that worry are two front. Worry one, that maybe RBI is forced to raise rates. Second worry is maybe there is some issue in asset quality, especially from the SME side. If situation remains worrisome for a long time. Both these worries are valid, but those will come into the picture only if, I guess, if this war prolongs for 3-4 months. Then those worries will come into the picture, according to me. Otherwise, I believe right now we have already seen the early quarterly numbers from all the banks. Numbers are very healthy, growth is healthy, and in terms of NIMs also, mostly I believe NIMs have bottomed out for most of the banks. Valuations are very reasonable. So such environment is very conducive for making money in banking financial services.
Rohit?
Another one which we asked is IT services.
Yes.
IT, the challenge was more from AI rather than this war. The traditional IT services is facing a challenge of disruption because of the way AI is emerging. And what may happen is, because of the usage of AI, there may be some revenue deflation, because a part of the work which used to take previously 6 months can now be done in just 1 month with the use of AI. So some of those worries I also have, and that's why on the traditional IT services, I still maintain a slight underweight, though the stocks have corrected, but I still maintain a slight underweight. However, there are niche players in IT which this AI disruption is actually beneficial, like in the advertisement technology. So that part of the market, I am overweight.
Okay. Uh, a- Advertising technology, but that's very niche, right, Rohit?
So those is like, that's what we have to find, those niche areas
Understood.
which are AI beneficiaries, and those are the parts which will do very well going forward.
How will IT otherwise deal with it? What's your view? There'll be a compression in terms of revenue. Will margins go up? Will headcount come down? How should one track it? And what's the kind of commentary you're penciling in? Because IT will come out with numbers first, and we're seeing a decent kind of run up from the lows, of course, within the Nifty IT index as well. So I'm trying to get a sense as to what to expect.
Frankly, the numbers, I don't expect that numbers you will see much disappointment. Numbers will be broadly in line. The worry from AI is towards the future in terms of the future outlook. How does their deal negotiations progress going forward? And what happens, what do clients think in terms of spending on IT services, especially traditional IT services? That's where I believe somewhere towards the later half of this year, we may start seeing some revenue deflation where contract sizes get cut, companies are forced to pass on benefits to the clients, and to that extent, there may be some headcount reduction. But that's something which I'm expecting will happen towards the later half of this year.
And what's the take with regard to metals, Rohit?
Metals had a good rally. So now from here on, I am a slight underweight on the metals. And that's mainly to do with the cyclical nature of that sector. And we already have enjoyed a good cycle. So I'm booking my profits here.
Okay, and then what is your key overweight? So you're booking profits in metals. Your key overweights, one is niche IT. What's the other
Yes.
key overweights?
The biggest overweight I have today is what I call lending financials, the entire banks and NBFC pack. That's my biggest overweight today.
Interesting. And within lending financials, is it some of the large lenders? Because uh, we spoke with SkyMet earlier today, and there was some bit of pessimism with regard to rains for this year as well. They'll be at the lower end of the band likely. Does that at all concern you? I mean, just outside of all of the risks that this war brings, does weather and patterns also influence some of that? Because NBFCs largely, at least the larger ones, get impacted by some of these metrics.
Yeah, so rains most for the rural focused NBFs, there will be some issue there. But right now, what I have in the portfolio is mostly your traditional banks and your larger NBFCs, which are more urban focused, urban consumption focused NBFCs. So I don't think rain will be too much of a worry there.
And Rohit, in terms of what about the Make in India theme, EMS, pharma, for example, how are you betting on that entire bunch of themes?
Actually, I'm kind of underweight on that entire EMS Make in India theme. That theme played out very well when it was only the narrative. However, now the time is for execution and to show results, and that's where there are challenges emerging on the different fronts. So each individual companies are facing challenges in terms of reaching their PLI targets. So there and some of the companies are not even able to put on their capex at the right time. So that's why I am underweight on that theme.
Rohit, thank you so much for giving us your views and perspectives with regard to this market. You're clearly bullish, and some of those themes is something that we'll track, obviously, and have a conversation with you in a month or so to try and get a better perspective of how you're viewing markets. Okay, what we'll do is slip into a very short break, continue conversation on the other side. Stay with us. More action to follow.